The markets are closed, but the business stories are just heating up. Hello, I'm Robert Tan. Catch up with us on Business Brief. Shares in Asia were mixed on Friday after Wall Street drifted higher. This as reports suggested that the Federal Reserve may have more leeway to slash the interest rates later this year to support the U.S. economy. This if it weakens under the weight of President Donald Trump's high tariffs. Japan's Nikkei 225 is flat with a slight uptick, while Australia's ASX 200 rose 0.46%. Hong Kong's Hang Seng fell 0.52%. However, gains were seen in South Korea's Kospi, up 0.14%, and Indonesia's JKSE, which added 0.31%. India's Nifty declined 0.24%, while Taiwan's TAIEX edged up 0.23%. In the currency market, the US dollar weakened against several Asian currencies, slipping 0.23% against the Japanese yen and falling 0.49% against the South Korean won. It also lost ground against the Thai baht and Singapore dollar, down 0.35% and 0.23% respectively. Meanwhile, the dollar is up by nearly 0.1% against the Hong Kong dollar, while the Australian dollar strengthened 0.41% against the greenback. Commodity and cryptocurrency markets saw varied movements. Gold eased slightly by 0.15%. Oil prices were mixed, with West Texas Intermediate crude and Brent crude rising nearly 0.1%, while Dubai crude dropped sharply by almost 2%. In the crypto space, Bitcoin gained 0.80% and Ethereum advanced more than 2%. China urges the United States to lift its restrictions on the global use of Huawei chips, warning that Washington's move could further disrupt global tech supply chains amid rising trade tensions. The call was made by a spokesperson from the Chinese Ministry of Commerce on Thursday. This follows a new notice from the U.S. Department of Commerce stating that the use of Huawei chips anywhere in the world may violate U.S. export controls and could result in enforcement action. The Chinese spokesperson accused the U.S. of abusing export measures, saying the restrictions are based on unfounded accusations. They warned that this move threatens the stability of the global semiconductor, industrial, and supply chains, a critical concern for countries like the Philippines that are heavily dependent on tech imports and electronics exports. The U.S. has yet to issue a formal statement on the matter. United Arab Emirates President Sheikh Mohammed bin Zayed Al Nahyan tells U.S. President Donald Trump that the UAE remains committed to deepening strategic ties with the United States, a move that could shape regional investment flows, digital infrastructure, and strategic alignments impacting partners like the Philippines. This comes after the UAE pledged a $1.4 trillion investment framework in the U.S. earlier this year, signaling strong capital movement and partnership in key sectors. Both countries are also collaborating to build a massive data center complex in Abu Dhabi with a 5-gigawatt capacity to advance artificial intelligence. Trump's visit to the UAE marks the final stop of his Gulf tour, which includes stops in Saudi Arabia and Qatar. The strengthening of U.S.-UAE ties could influence technology access, defense cooperation, and investment priorities, with ripple effects on countries like the Philippines that are also pursuing foreign investments in tech and infrastructure. A technology framework agreement is also being finalized, which may give the UAE broader access to advanced U.S. AI chips, positioning the Gulf state as a regional tech hub that may compete or collaborate with other Asian digital economies.
And I look forward to having you in the White House. We'll celebrate together. But we are going to be your friend and we're going to be your partner. And we really appreciate your confidence and an investment. That's your biggest investment that you've ever made. And we really appreciate it. And we're going to treat you very, as you should be, magnificently. And you're a magnificent man, and it's an honor to be with you.
In world news, Ben Cohen, co-founder of the iconic ice cream brand Ben & Jerry's, is arrested after protesting the Gaza war during a U.S. Senate hearing led by Health Secretary Robert F. Kennedy Jr. The incident highlights the growing role of corporate voices in social justice movements and the rising public scrutiny over America's involvement in the Israel-Gaza conflict. A video captures the moment Kennedy jumps out of his seat as a protester interrupts his testimony. Cohen was among 6 pro-Gaza protesters who disrupted the hearing, underscoring deep divisions in American politics and the use of civil disobedience to press for foreign policy change.
Congress kills poor kids in Gaza by buying bombs and pays for it by kicking kids off Medicaid in the U.S.
In Bolivia, hundreds of gold miners take to the streets demanding government action on persistent dollar and fuel shortages that are disrupting commerce and weighing on the country's fragile economy. Mining cooperatives, a key driver of Bolivia's informal economy, are also calling for official recognition and inclusion in public policy to better protect their livelihoods. The demonstrations were joined by small traders and merchants facing similar pressures amid limited access to foreign currency and surging costs of basic goods. Bolivia has been battling a dollar shortage since early 2023, part of a wider strain on emerging markets facing inflation, fuel supply issues, and global monetary tightening. While the Philippines remains stabilized by remittances and export inflows, the protests reflect broader risk for resource-based and import-dependent economies amid a volatile global currency environment. Japan's gross domestic product fell 0.7% in the first quarter of 2025. This snapped a year of growth worse than the 0.2% forecast. Net exports cut 0.8 percentage points from the GDP, hit by U.S. tariffs targeting autos. Private consumption, which accounts for more than half of Japan's economic output, was flat in the first quarter. External demand or net export cuts 0.8 percentage points of the GDP growth, while a de-escalation of U.S.-China trade tensions offered markets and policymakers some relief. It's still not clear if Japan can get exemptions from U.S. tariffs in bilateral trade talks with Washington. New Zealand is injecting 577 million New Zealand dollars into its film rebate program. This is a direct response to U.S. President Donald Trump's 100% tariff on non-U.S. movies. Finance Minister Nicola Willis calls it a strategic bid to keep global production coming in. Despite budget cuts, the country's film sector, worth over 3.5 billion New Zealand dollars and 24,000 jobs, is too valuable to lose. And we're taking a short break. The biggest business stories from around the country are up next. You're watching Business Brief. The Budget Department clears the release of 63.7 billion pesos worth of mid-year bonus for state workers. Starting May 15, qualified personnel from rank and file to uniformed services will receive a payout equal to 1 month's basic salary. Budget Secretary Amena Pangandaman called on agencies to fast-track the disbursement while advising employees to handle their funds with care. The growth in cash remittances slowed down for 3 straight months. Angelo Taninco, chief economist at Security Bank, tells Bilyonaryo News Channel's Business 360 this is due to the rising uncertainty caused by U.S. President Donald Trump's sweeping tariffs, which is affecting the rest of the world. He also says the restrictive U.S. immigration policy dampens remittance flows. Data from the Bangko Sentral ng Pilipinas shows cash remittances grew to $2.81 billion in March, compared to $2.74 billion a year ago.
In fact, we've seen remittance flows from the U.S., which accounts for more than 40% of the total, growing by only 1.1% year-on-year in March and by only 1.4% for the first quarter. This is the slowest remittance growth since second quarter of 2020, when the lockdown pushed remittances down significantly.
Taninco, meanwhile, forecasts that the economy will grow at 6% in the second half of the year due to low base effects.
Secondly, we see the interest rates to be reduced further. After the BSP's 25 basis point cut last month, we are expecting 50 basis points more. The second, we think, will happen in June. And the third, 25 basis point cut, we believe will be in August. So it's a back-to-back cut that will reduce borrowing costs and therefore invigorate the demand side of the economy further. And third, inflation is benign. We have projected the inflation to be a notch below the 2% minimum target range of the government at 1.9%. So we think with the benign inflationary environment, rate cuts can continue, and that will help propel economic growth in the second half.
Meanwhile, approved foreign investments plunged to nearly 28 billion pesos in the first quarter of the year, an 82% drop that sharpens worries over the Philippines' ability to attract global capital amid rising geopolitical risks and trade uncertainty. The slump underscores the fragility of investor confidence at a time when emerging economies face intense competition for funds in a high-rate, high-risk environment. Data from the Philippine Statistics Authority, or PSA, show foreign investment commitments fell to 27.8 billion pesos, down from 155.26 billion in the same period last year. Calixto Chiquiamco, president of the Foundation for Economic Freedom, says the decline reflects growing geopolitical uncertainties and trade disruptions tied to U.S. President Donald Trump's tariff policies. Economists warn that sustained weakness in foreign inflows could impact the peso, job creation, and the country's medium-term growth trajectory. Philippine inflation is seen staying within the Bangko Sentral ng Pilipinas' 2 to 4% target until 2027, a positive signal for price stability, policy direction, and long-term investment planning in an otherwise volatile global environment. The outlook provides breathing room for the central bank to support growth while keeping consumer costs in check, a key consideration as developed economies struggle to tame sticky inflation and emerging markets compete for capital. Economists surveyed the central bank says inflation is expected to settle at 3.1% in 2025, 3.3% in 2026, and 3.4% in 2027. The BSP notes that respondents see upside risk from geopolitical tensions, change in global trade policies, and adverse weather conditions. However, they also flag downside pressure from stable or lower rice prices, which could help moderate overall inflation. This stable inflation trajectory will be crucial in guiding future decisions on interest rates, credit growth, and fiscal support, and in maintaining confidence across consumers, investors, and businesses. Rising power rates is keeping Samsung from putting up an advanced chip plant in the Philippines. The South Korean tech giant is referencing regional power rates as its standard. Talks with the government are ongoing, with the Energy Department under pressure to deliver competitive pricing. Samsung is bringing in over $1 billion for the project, well over the 50 billion peso investment covered by the Create More Act, or corporate recovery and tax incentives for enterprises to maximize opportunities for reinvigorating the economy. Philippine Economic Zone Authority Director General Tereso Panga assures fiscal incentives have been settled as billions in foreign investment and high-tech jobs hang in the balance. Bilyonaryo Ed Saavedra's mega-wide opened 2025 with a 210 million peso net income, up 14% year-on-year. The boost came from its real estate arm, PH1 World Developers, which posted its first ever profit on 397 million pesos in revenues. PTEX Terminal income also surged 27% to 136 million pesos. Total revenues hit 4.2 billion pesos, despite a construction slowdown, a 41.5 billion peso order book, and 2 billion pesos in new contracts sustained momentum. And SM Prime Holdings Incorporated rolls out 131 electric vehicle charging stations nationwide as of the first quarter of 2025, supporting the Philippines' push towards cleaner mobility and lower carbon emissions. The Bilyonaryo C siblings firm also plans to add at least 50 new EV charging stations nationwide in 2025 as it accelerates its support for sustainable transportation. The upcoming rollout will expand the reach of its clean transport infrastructure to residential communities and leisure estates, in addition to its malls and office developments, strengthening EV readiness across urban and suburban hubs. PLDT reports an 8% drop in first quarter net income to 9 billion pesos as rising operating costs outpace modest revenue gains amid intense competition and shifting technology demands. The result reflects growing pressure on telecom players to balance infrastructure spending, digital transformation, and profitability in an evolving connectivity landscape. Total revenues increased slightly by 1.95% to 55.28 billion pesos compared to the same period last year. Service revenues rise by 2.34%, while non-service revenues dropped by 8.38%. PLDT's digital finance unit, Maya, turns profitable with a 127 million peso net income, while its data center arm, Vitro, sees revenue growth fueled by surging demand from artificial intelligence applications. Bilyonaryo Chairman and CEO Manuel V. Pangilinan says the company remains focused on recovery and growth, particularly in broadband, fiber connectivity, and digital finance, which are seen as core enablers of the country's digital economy. And we're taking a short break. Business Brief will be right back. Cebu rolls out key infrastructure upgrades on land and sea, including a new runway at the Mactan-Cebu International Airport and the launch of a high-end yacht service. These developments aim to boost tourism and mobility in one of the country's fastest-growing economic hubs. Our mobility correspondent, G. Baroga, has the details.
BNC Mobility hits the road and the waves in Cebu. We start at the Mactan-Cebu International Airport, or MCIA, where a major new development has just been unveiled. In January, President Bongbong Marcos inaugurated the new 2.55 billion parallel runway, the first of its kind in the Philippines. The runway is a game changer for Cebu's connectivity. MCIA has already significantly contributed to the growth of Cebu, the entire Central Visayas region, and the surrounding provinces it serves. Last year alone, the airport handled 8.5 million domestic passengers, 2.8 million international passengers, 67 million kilograms of cargo, and nearly 100,000 flights. With this new runway, MCIA is set to improve operational efficiency, accommodate more flights, and solidify its role as a key gateway for the Visayas and Mindanao. As we explore the Queen City of the South, we also caught a glimpse of progress in motion. We passed by parts of the Cebu Bus Rapid Transit System project. Much like Metro Manila's EDSA busway, this dedicated lane aims to make commuting faster and more efficient and give people a more comfortable and reliable ride. It also aims to cut energy use and emissions. We asked the Department of Transportation for the latest on the project, and while there have been a few delays, they say updates are on the way and work is very much ongoing. In fact, we already spotted some stations sporting their stylish, lift-inspired roofs. Transport Secretary Vince Dizon earlier said they're all in on making this project happen, with the help of community dialogue and strong collaboration. Once completed, the Cebu BRT is expected to serve around 160,000 passengers. But wait, our Cebu trip doesn't end on land. We also got to experience something truly special, a yacht cruise courtesy of New Star Resort. Sitting right at the edge of the South Road properties and surrounded by water on three sides, New Star offers more than just luxury. It's got views that will leave you breathless.
Apart from operational excellence, apart from the physical attributes of the resort, we're in the business of creating experiences. And Crucero is one of them.
Introducing Crucero, a signature yacht cruise that glides through the calm, scenic waters of the Mactan Straits. It's not just a boat ride, it's an escape.
People run it periodically. It's open to the public, in fact, not just to hotel guests. It will open on a seasonal basis depending on the weather and the seasonality. But again, like I said, it's something that we pitch as one of the signature experiences that Q-Star has to offer.
From city lights to ocean breeze, this cruise lets you soak in views of the now iconic Cebu-Cordova Link Expressway that's specially magical when it lights up at night. And even if the sun decides to skip the show during our ride, the vibe stays relaxed and cozy. It's the perfect setting for good food, chilled drinks, and bonding time with family and friends right in the middle of the sea.
Philippine shares closed flat with a slight downward bias in the final trading day of the week. The PSE index ended with little change, slipping slightly to close at 64.66, finishing the day as the 8th worst performer in Asia. The day's sectoral indices ended mixed, with mining and oil rising the most at nearly 2%. Holding firms fall the most at more than 1%. Advancers narrowly outpaced decliners 85 to 84. Total value turnover reached 6.6 billion pesos. Week on week, the PSEI rose 0.1%. The day's most active stocks ended mixed, with SM Prime rising the most at nearly 3%. Ayala Corporation, meanwhile, fell the most at more than 4%. Meanwhile, at the foreign exchange market, the peso is currently trading at 55.60 against the greenback, strengthening from previous close of 55.75. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again next week as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News channel. See you then.